Today we are diving into a sector that's critical for both our well-being and our investment portfolio. This is the PGIM India Healthcare Fund NFO. So this fund is focused entirely on India's healthcare sector, covering everything from pharmaceuticals to healthcare services. So let's break down whether investing in this fund will help you create wealth in the long term or whether it will be suitable for you or not by doing an in-depth analysis in this video. Hi. Welcome to holisticinvestment.in. We help individual investors like you to take the right financial and investment decision to reach your financial goals in a more faster and smarter way. So before analyzing this fund, let us first understand a few basic details about it. So as I have already told you, this is an NFO, which means it opens on 19 November 2024 and closes on 3rd December 2024. And some of the key features of this fund are it is an open-ended fund type which belongs to the category of equity, which is in sectoral pharma, and it has BSE Healthcare TRI as its benchmark index, and there is an exit load of 0.5% for redemption within 3 months. So there is no entry load, and the minimum investment amount you need to start investing in this fund is just 5,000 rupees. And the fund managers for this fund are Mr. Ananda Badmanabhan Anjaneyan, Mr. Utsav Mehta, Mr. Vivek Sharma, and Mr. Puneet Pal. And according to the riskometer, the risk involved in this fund is very high. And if we'll take a look at the primary investment objective of this fund, which is to seek to generate long-term capital appreciation for the investors by investing in equity and equity-related securities of pharmaceuticals and healthcare companies. Now we have a basic understanding of this fund. Let's move on to analyzing the pros and cons of investing in this fund to see whether it will be worth investing in the long term or not. So first of all, let's take a look at the pros. So there are 4 key advantages to investing in this fund. Number 1 is the growing healthcare sector potential. So India's healthcare sector is seeing rapid growth driven by rising demand for medical services, pharmaceuticals, and healthcare technology. So investing in this fund means you're capitalizing on the long-term growth potential in one of the country's essential sectors. Number 2 is the defensive investment option. So healthcare is often considered a defensive sector, since demand for healthcare services is less affected by economic downturn. This fund could offer stability during volatile times as people continue to need healthcare regardless of the economy. Number 3, diverse exposure within healthcare. So this fund provides exposure to a variety of subsectors like pharmaceuticals, hospitals, and medical devices, offering a diversified approach within the healthcare industry. This helps to spread risk across different types of companies within the sector. Number 4 is the long-term growth driven by innovation. India's healthcare sector is also benefiting from advances in technology and research. So innovation in areas like telemedicine, biotech, and pharma manufacturing add a layer of growth potential for this fund. So these are all the pros of investing in this fund. Now, if you take a look at the cons, there are also 4 key potential drawbacks to investing in this fund. Like number 1, sector concentration risk. Because this is a sector specific fund, it lacks diversification outside healthcare. So if there is a downturn in this industry, the fund's performance could be directly impacted, leading to higher risk compared to diversified equity funds. Number 2, sensitive to policy or regulation changes. So the healthcare sector is heavily regulated. Changes in government policy, drug pricing regulations, or healthcare compliance requirements could impact profitability for companies in this space, adding some regulatory risk to this fund. Number 3, higher expense ratio. So since this is an actively managed sector fund, it often comes with a higher expense ratio compared to broad market fund. This could eat into your returns, especially in years when the healthcare sector underperforms. Number 4, volatility due to global market factors. So the Indian healthcare sector can be influenced by global events, especially when it comes to pharma exports and international regulatory compliance. Events like currency fluctuation or international trade policies can increase volatility in this fund's performance. So these are some of the potential risks you might be undertaking while choosing to invest in this policy, which you need to carefully consider before choosing to decide invest in this fund. So what is the final takeaway from this? Should we invest in the PGIM India Healthcare Fund or not? Is it worth investing or not? As you can see from our analysis that it offers a unique opportunity to invest in India's expanding healthcare sector with defensive benefits and growth potential. However, sector concentration and sensitivity to policy changes means it is a better fit for investors who understand the dynamics of healthcare and are comfortable with the associated risks. So it completely depends on what kind of investor you are and what kind of risk tolerance you have and what is the time horizon you have for your investments in mind. So it completely depends on what kind of investor you are. But our personal opinion is, so as a thematic fund, this is a thematic fund. If you are a first time investor, you are just beginning to invest, then this might not be suitable for you and you can avoid investing in this fund, because to invest in a thematic fund like this, you need to have at least a certain kind of expertise or know a bit more about the market and how to navigate about it. But so if you're just beginning to invest, it can become a little bit difficult for you to navigate around it because of the associated risk, which is higher compared to equity diversified funds also, because they are well balanced in terms of sector diversification, but here they are only focused on one sector. So it's better if you choose not to invest in it. And also, as I have already said, it is as high risk. So if you're a conservative investor and you're not willing to take that much of risk, then also you can avoid investing in this fund. But if you still want to invest in a healthcare thematic fund like this, then there are other existing similar thematic fund like this with a track record of at least 7 to 10 years. Why am I insisting on 7 years is because in 7 years, market cycle would have also gotten completed. So you will know how it has performed in the highs and lows and you will be able to take a calculated risk. But when you are investing in an NFO like this, which is yet to build a track record, and you do not know how it will perform in the future because it's just starting to perform. So what you're taking here is a blind risk, which if it underperforms in the future will definitely impact the returns in your investment portfolio negatively. So that's a huge risk you're taking, which you can easily avoid by investing in other similar thematic funds with a proper track record. And this fund is not suitable also for people or investors who are looking for funds to add to their core investment portfolio to reach their financial goals. So if you're an investor like that, it's better to avoid investing in this fund, because as I have already mentioned, this is a thematic fund which is high risk, and especially it is an NFO which is yet to build a track record. So if you add it to your core investment portfolio and negatively performs, it will also negatively impact the returns in your investment portfolio. So it can mean a huge thing. If you're trying to adding this fund to your core investment portfolio, it might not be suitable. So instead, what you can do instead is, if you would really do want to invest in PGIM India Healthcare Fund and you do have some spare money lying around, then you can invest it through your satellite portfolio with a minimum investment amount on a trial basis or an experimental basis. And over the years, if it performs well, then you can slowly increase the investment amount according to what you see fit. You can do invest instead in this way, instead of invest adding to your core investment portfolio. And also, as I've already said, to invest in a thematic fund like this, you need to know, at least a seasoned investor, you need to know how to navigate the market, especially when the market is already unpredictable. So you need to know when to exit and enter and exit from a thematic fund like this. It's very important. So if you do not know that, please do not invest in this fund, because it might not be suitable for you. And also, as an investor, if you're struggling to decide which fund will be good for you or worth it for you to achieve your financial goals in the long run, then and you need some professional guidance, because either you do not have the knowledge about it or you do not have the time to research about it because your life is already hectic as it, then you can definitely seek professional guidance from a certified financial planner who will look at the suitability of the fund's investment objective, risk profile, overlap ratio, allocation, and see whether it aligns with your financial goals and your investment horizon, and then suggest those funds for you and making your investment journey hassle-free for you in the long run. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.